Global Stock Market Weekly Brief for the week ending Friday, the 11th of April 2025. In the U.S., stocks gained over the week with the Dow Jones, S&P 500 Index, Nasdaq Composite, and Russell 2000 Index all surging. The week began with stocks sharply declining, continuing their losses from the prior week, as negative sentiment intensified ahead of Wednesday's implementation of the Trump administration's latest round of tariffs. However, on Wednesday, the U.S. President announced that he was implementing a 90-day pause on the higher reciprocal tariffs for most countries, effective immediately, to enable time for negotiations. The news sent equities skyrocketing, with the Nasdaq Composite gaining over 12% and logging its second-best day on record. However, worth noting is that Donald Trump excluded China from the 90-day pause and instead declared several hikes to tariffs on Chinese goods throughout the week of up to 145%. While China responded with several increases to levies on U.S. imports of up to 125%. The heightening trade war between the world's two largest economies and worries about the broader impact it could have on global economic growth eroded on some of Wednesday's positive sentiment, that led to equities giving back some gains on Thursday. In the Federal Reserve's policy meeting on Wednesday, they noted that they expected increased downside risks to employment and economic growth and upside risks to inflation, while stating that high uncertainty surrounded their economic outlooks. The volatility and uncertainty around global trade during the week negatively affected U.S. Treasuries, which generated losses as yields increased across most maturities. Long-term yields saw the sharpest increase, followed by intermediate and short-term yields. The yield on the benchmark 10-year Treasury note rose to well over 4.5% by Friday morning after ending the prior week under 4%. This showed investors reduced confidence and increased risk perception of U.S. Treasuries. In Europe, equities expended their losses from last week, with all the major stock indices including the Euro Stoxx 50 Index, Germany's DAX 30 Index, and France's CAC 40 Index declining together with the UK's FTSE 100 Index. Worth noting is that the market's rebound after Donald Trump paused on the imposition of reciprocal tariffs for most trading partners reduced their losses. The market turmoil sparked by Trump's tariff announcements prompted central banks in the Eurozone and the UK to step up their monitoring of financial institutions and markets. The European Central Bank called on banks to check on deposits and other forms of funding more frequently. The Bank of England asked lenders for information about market liquidity and whether hedge funds and other clients were facing problems. The Bank of England also amended its schedule for bond sales in the second quarter in response to market volatility, delaying auctions of long-dated gilts. Japan's stock markets continued declining over the week, with the Nikkei 225 index down around 0.6%. The indexes plunged on Monday as the sell-off triggered by the U.S. administration's aggressive tariffs and fears about a global trade war intensified. Japanese banks suffered some of the sharpest declines on the day. However, Donald Trump's willingness to begin trade talks with Japan offered some respite, and later in the week, Japanese shares surged on the announcement that new tariff rates on most U.S. trading partners would be lowered to 10% for 90 days from the previous 24% tariff that had been applied on Japanese imports. Worth noting is that the 25% tariff imposed on Japan's automotive imports into the U.S. was not included in the reciprocal tariff pause, with Japan still seeking an exemption from the higher tariffs. Mainland Chinese stock markets extended their losses for yet another week, with the Shanghai Composite Index plunging by about 3% in local currency terms. In Hong Kong, the benchmark Hang Seng Index shed about 9%, staying in the negative territory for the fifth consecutive week. Mainland Chinese equities recorded another weekly decline. However, losses were disrupted by hopes that the spiraling trade war with the U.S. would lead to Beijing rolling out fresh stimulus to boost the economy. On Friday, China raised tariffs on U.S. goods to 125% from 84% starting on the 12th of April, a day after the Trump administration clarified that the total tariffs on China reached 145%. However, Beijing termed the U.S.'s latest increase as a joke, and appeared to rule out any more tariff hikes on its part. Donald Trump's tariffs on China may reduce China's gross domestic product by 1% to 2% this year, although Beijing has the capacity to offset the U.S. administration's tariff hikes through continued fiscal stimulus. In Asia, Indian markets experienced a downward trend this week with the Nifty 50 index falling by about 0.3%. However, the losses in Indian equities were narrowed by a surge in the Indian stock market that was primarily attributed to the U.S. announcement of a 90-day suspension of an additional 26% tariff on India, which boosted investor sentiment. Nonetheless, persistent global trade uncertainties continued to play a significant role in market dynamics. In Latin America, Brazil's Bovespa index rose by about 0.3% for the week even though Friday's negative performance erased some of the previous day's gains. Friday's modest drop followed Thursday's 1.05% gain, which had temporarily lifted market sentiment after weeks of volatility and still allowed the benchmark to finish the week with a positive 0.33% increase. The index now sits approximately 7% below its August 2024 peak of 137,343 points, reflecting persistent investor caution amid global economic uncertainties. This report has been brought to you by Yaku Eco, from Kenya. Follow and engage with us for more insights regarding finance and investments.